312 million ounces. That's the amount of annual silver production capacity that could be at risk right now due to mine shutdowns, suspensions, and operational problems that almost no one is talking about. To give you some context, total global silver mine production is about 820 million ounces per year. We're talking about a potential disruption affecting nearly 40% of the world's annual silver supply. This isn't a prediction for the future. It's happening as we speak. And yet, where are the headlines? The story is buried deep in quarterly reports, hidden in niche industry publications, and scattered across regulatory filings that most people never see. Welcome to the Wealth Radar S. Today, I'm connecting the dots on what looks like a major supply shock unfolding in the silver mining industry. This is my analysis based on publicly available information. Let me show you what I'm seeing and explain exactly where that 312 million ounce figure comes from. Over the last several months, I've been meticulously tracking mining company announcements, production reports, and industry news. I've compiled a list of mines that have announced shutdowns, suspensions, or significant production cuts. The sources are all public: company press releases, quarterly earnings reports, and regulatory filings. Let's look at the summary. In Mexico, the world's largest silver producer with about 190 million ounces annually, several major operations have hit serious roadblocks. We've seen labor disputes causing temporary shutdowns, regulatory changes creating massive uncertainty, and even water access issues impacting operations. Then there's Peru, the second largest producer at around 110 million ounces a year. Political instability and ongoing community conflicts have disrupted multiple mining operations across the country, and it doesn't stop there. In Bolivia, Argentina, and other key silver-producing nations, we're hearing similar stories: environmental protests, permitting delays, and serious infrastructure challenges. When you add up the annual production capacity of all the operations that have announced some kind of disruption, the number gets very close to 312 million ounces. Now let's be crystal clear about what this means. It does not mean that 312 million ounces have vanished from the market overnight. Many of these disruptions are temporary. Some mines are still running, just at a reduced capacity. Others will eventually resume full operations after resolving their issues. But what it does mean is that the silver mining industry is under significant stress. Operations that used to run like clockwork are now facing constant challenges. The buffer in the global silver supply is getting dangerously thin. And the mainstream financial media? They aren't giving this the comprehensive coverage it deserves. You'll find these stories in specialized mining journals, not on the big financial news networks. So let's break down the specific factors I'm seeing. My research points to three main categories of challenges hitting silver mining operations right now. The first major factor is labor and social challenges. Mining is a labor-intensive business, often located in remote areas with very complex relationships with local communities. When those relationships break down, production grinds to a halt. In Mexico, for instance, labor disputes have hit several major silver mines over the past year. Workers have been striking for better wages and working conditions, leading to work stoppages. In Peru, community opposition to mining projects has intensified. Protests and blockades over water usage, environmental impact, and fair benefit sharing have become common, cutting off access to mines. These aren't just isolated incidents. They represent a growing tension between mining companies, their workers, and local communities across the world's most important silver regions. The second factor is regulatory and political uncertainty. Mining is a long-term game. Companies invest billions of dollars based on the assumption that the rules won't suddenly change. But when regulations are altered unexpectedly or political instability creates a volatile environment, that investment dries up. We've seen this in Mexico, where recent changes to mining laws have created a fog of uncertainty, causing some companies to put their expansion plans on hold. In Peru, constant political turnover and shifting policies have made the operating environment incredibly difficult. Companies are reporting major delays in getting the necessary permits and approvals to even function. On top of that, environmental regulations are getting stricter in many places, which increases compliance costs and operational complexity. All of these factors combined are creating a perfect storm for the silver supply chain. Mines are struggling to produce, and the buffer that once existed is shrinking fast. The question is, how long can this go on before the wider market starts to feel the effects? The data suggests we might find out sooner rather than later. This is a developing story and one I'll be tracking closely. This regulatory uncertainty doesn't shut down mines right away, but it absolutely guts investment in things like maintenance, exploration, and expansion. Over time, that means production capacity just slowly declines. Then there's factor 3, economic viability. Let's be real, silver mining economics are tough. Silver prices are famously volatile, while operating costs for labor, energy, and fuel just keep climbing. Mines that were profitable when silver prices were high can suddenly become unprofitable when prices drop. Industry analysts say the all-in cost for many mines is between $18 and $22 an ounce. When the silver price flirts with those numbers, the stress is on. What's more, about 70% of silver is actually a byproduct of mining for other metals like copper, lead, and gold. So if the prices for those primary metals fall, silver production falls right along with them. Now, these three factors don't just exist in a vacuum. They feed into each other. Labor disputes get uglier when companies are already struggling financially. Regulatory uncertainty kills the very investment needed to solve community issues. And economic problems make it nearly impossible to swallow new compliance costs. It's a perfect storm, creating a tough environment in major silver-producing regions all at once. Of course, not every mine is hit the same way. Some run just fine. But the big picture points to some serious stress on supply. Let's put this into the broader context of silver supply and demand. According to the Silver Institute, the market has been in a supply deficit for several years straight. Demand has been outstripping what we can mine and recycle. To make up the difference, we've been dipping into our above-ground stockpiles. Essentially, the market is burning through its savings to meet today's demand. Now, what happens if that mining supply I mentioned faces even more stress? Let's say those 312 million ounces of at-risk capacity see a production loss of just 20 to 30%. That's an extra 60 to 90 million ounces of silver vanishing from the market. Add that to the existing deficit, and you're looking at an even faster drain on those inventories. At some point, the savings run out. When that happens, something has to give. Either demand has to fall or prices have to rise to balance things out. I'm not making a prediction here. Markets are incredibly complex. Higher prices can spur new production and curb demand. But the simple math is that you can't run a deficit forever. Inventories are finite. The mining challenges I've laid out could seriously speed up the timeline for this supply-demand showdown. Or maybe they won't. Mines could reopen, new ones could come online, demand could drop. It's anyone's guess. I'm giving you this framework not as a prediction, but as context for why you need to pay attention to what's happening at the mines. So why isn't this all over the mainstream news? Well, for one, it's a fragmented story. A labor strike here, a permit issue there. Each event is too small on its own to make headlines. You only see the bigger picture when you connect all the dots. Most journalists just don't do that. Second, it's technically complex. Understanding mining supply involves geology, economics, and geopolitics. It's not a simple soundbite. It's much easier for the media to report on daily price swings than to explain the deep-seated reasons behind them. Third, these problems develop slowly. A mine doesn't just shut down overnight. It's a slow burn over months or even years, which doesn't fit the fast-paced news cycle. And finally, maybe there's just limited audience interest. But for those of us paying attention, these fundamentals are what truly matter. Why is no one talking about this? I'm talking about silver, and specifically, the silent crisis brewing in the global silver mining industry. Now, I know what you're thinking. Silver mining in some far-off place. That sounds niche, and you're right. Most financial media just doesn't cover it because, frankly, most people aren't clicking on articles about silver mine supply. They cover what gets views, and that's usually not the nitty-gritty of mining operations. The result? Significant supply issues often fly completely under the radar until it's too late. By the time you see prices jumping or hear about shortages, the people in the know have already seen the writing on the wall. The chance to get ahead of the curve is gone. So let's connect some dots that the mainstream media is missing. Based on my deep dive into public mining company reports and industry data, a staggering 312 million ounces of annual silver production capacity is currently facing major challenges. We're talking about everything from labor disputes and strikes to tough new regulations and serious economic stress. To put that in perspective, that's a huge chunk of the global supply. Now, this doesn't mean all 312 million ounces are going to vanish overnight, but it does signal that the silver mining industry is under some very real pressure, right when the market is already dealing with a supply deficit. It's a story hiding in plain sight. The information is out there, but it's scattered across dozens of different sources. You have to piece it together, connecting dots that most people aren't even looking for. Now, let's be fair and look at this from other angles. You could argue that disruptions are just a normal part of the mining world. It's a volatile business, right? Labor issues, operational hiccups, they happen. Maybe what I'm seeing isn't a brewing storm, but just business as usual. That's a valid point. Another perspective is that the market will simply fix itself. When supply gets tight and prices go up, it suddenly becomes profitable to restart old mines or fast-track new projects. Supply rises to meet demand. This is classic economics, and it suggests the market might be more resilient than I'm letting on. Then there's recycling. Every year, about 150 to 180 million ounces of silver come from recycled goods. When prices climb, more people are tempted to sell their old silverware or jewelry. This recycling acts as a buffer, cushioning the market against any shocks from the mining side. It's a flexible source of supply that can ramp up when needed. And what about demand? Can't big industrial users just adapt? For some products, manufacturers might be able to use less silver or even substitute it with another material. So demand might not be as rigid as we think. It could bend instead of break. I've considered all these points, and they all have merit. I'm not dismissing them. However, what strikes me as different this time is the sheer concentration of these problems hitting so many major silver-producing regions all at once. It's not unprecedented, but it is highly unusual and definitely worth paying attention to. So, am I here to predict a massive silver squeeze or a price explosion? Absolutely not. The truth is, there's genuine uncertainty here. Anyone who tells you they know for sure how this will play out is just overconfident. My goal is simply to highlight a major development that isn't getting the attention it deserves. Whether it fizzles out or becomes a much bigger story remains to be seen. I've laid out the data and my interpretation. Now it's your turn to evaluate it. Think for yourself, and always do your own research. If you found this breakdown valuable and want to explore more market developments that are being overlooked, consider subscribing. I'd love to hear your thoughts in the comments. Are you tracking the silver market? What's your take on the current situation? Thanks for watching, and I'll see you in the next one.